Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. So friends, in this video, I'll be discussing very quickly on why the markets are falling and what is the main reason for such a fall. Right. So as you may be aware, friends, you know that FIIs are selling hugely in the Indian stock market, and because of which the indices are falling massively over the last couple of days. If you are new to stock market, FIIs are basically foreign institutional investors. So as the name suggests, they are financial institutes who are based in foreign markets, right? So they bring in dollars and invest in the Indian stock market and make profits. And whenever they have made good profits, or they have a better avenue for investing, take their money out and they start investing in other avenues. Right here, currently what is happening is, since the Federal Reserves have started quantitative tapering and tightening, the bond market yields are getting better and giving a better and secured returns. So the FIIs are started taking out the money from the Indian stock market. So here you can clearly see in the last 4 or 5 days they have massively sold their assets in the Indian stock market in the range of around 4,000 to 8,000. So if I have to compare this with what had happened in March 2020, a similar situation had happened in March 2020, where in a single month they had sold almost around 65,000 crores. And also if you see the worst days in March 2020, the most highest selling was happened on March 9th, which is around 6,500 crores. So if you compare it to the current scenario, which is much higher selling is happening in the current situation. To give a perspective here, friend, the current situation, they are taking an advantage of the Russia-Ukraine situation. So the Russia-Ukraine situation is a regional issue in Europe. Definitely there will be impacts all over the world, but this is not a similar situation as the COVID pandemic, where everyone were panicking and not sure how the situation would go further. Also, if you see the Nifty 50 chart for the last 5 years, friends, from 2017 to 2020, it was following a pattern. If you see here, it is following a particular angle in a consistent manner. All right. After 2020 March, because of the COVID pandemic, the stock market fall massively, and then the quantitative easing started, and it started giving a massive returns in the last 2 years, which is typically unlikely of any indices to give such high returns in a short period of time. So this correction was definitely expected. So the point now is, how much would be the corrections? If you think that the pandemic would have not happened, Nifty would also have taken a similar returns path. And if we see in that scenario, at the current market, it should have been around the 14,500 levels. So I don't say that the current market will immediately go to 14,500 or 15,000 levels, but definitely until it reaches a decent valuation, I think the markets will have these up and downs in recent times, and then it will start to follow this trend line. So that was a small analysis of how much the FIIs have sold in the recent times and why they are selling, and what would be the expectation of Nifty in the coming days, friends. So please like and subscribe to my channel. See you in the next video.